week ahead on the earnings calendar, including Bank of America, Morgan Stanley, and Lockheed Martin that are all reporting tomorrow morning. You've got Goldman, Tesla, Netflix coming up on Wednesday. And for more on all of this, you want to bring in Stephanie Link. She's Chief Investment Strategist and Portfolio Manager at Hightower Advisors. She's also a CNBC contributor. And Stephanie, here we go, really getting into the thick of things with earnings. What do you think of the big banks, and how are you kind of positioning yourself?
Yeah, we have 11% of the S&P 500 reporting this week, so we're just getting going. It's going to be busy. It's going to be a lot of fun. So what did we learn from the bellwethers last week, J.P. Morgan and Wells Fargo? We learned net interest income was better than expected. Total revenues were better than expected, and expense control was as expected. I think for JP, we are going to see positive operating leverage, and for Wells Fargo, we saw better deposits. So you kind of add it all up, and I think we're going to see Morgan Stanley have better than expected net interest income, better wealth management and investment banking, investment management, but investment banking is going to be down 24%. So puts and takes. Same with Bank of America. They're going to see better than expected net interest income, probably better expenses. They've been doing a very good job of that as of late. But capital markets going to be down 10%. Again, puts and takes. The way I'm kind of looking at the banks is I think you want to have capital markets exposure because you are seeing a bottoming, a troughing. And so I favor Morgan Stanley because they will benefit as a result. And I also like the diversification, right? They're going to have $1 trillion in assets in their wealth management business every 3 years. And the stock trades at about 14 times and gives you about a 3.5% dividend yield. So that's the one I would be playing.
Okay, let's talk about the oil patch at this point. Oil prices never went as high as we'd been expecting over the last year or so. But you have seen oil start to pick back up a little bit. You've now got WTI just below $75. You like Schlumberger in this group. Why is that?
I do, because the stock is the number one in the industry. It trades at 19 times forward estimates for 17% total revenue growth and 24% EBITDA growth. International is just starting to inflect, Becky, and that's 70% of their business. They have reported the last 17 quarters either in line or better than expected, so very good consistency. And I like their technology, the digitization within SLB, and how that helps margins and pricing.
We got some lousy numbers overnight out of China, concerns about how the consumer is doing, retail numbers, retail sales up by just about 3% or a little north of that, well below the gains that we'd been used to seeing in the decade before this. But you still like a casino company that has big exposure to Macau. You want to talk about that?
Yeah, so I know that we're seeing a variety of different data points that aren't so good in terms of China, as you mentioned, but the services part, the consumer part is actually doing better. The Caxton PMIs are comfortably above 50 for the last 6 months. And so as they reopen, I think the consumer is the way that you want to play China. And Las Vegas Sands, they have 40% of their business is in Macau. And last quarter, they beat on revenues and margins, and they only had, and 31% of their hotels were closed, and they only had 39% of airport volumes that were happening, right? So I think you're going to see an improvement. The free cash flow is going to, I think, be to the upside, and they'll be able to pay down debt and continue to do various different build-outs within their casino franchise.
Do you like casinos that have more exposure here in the United States, or is this really purely a play on China?
It's play on China. It's play on the reopening. That's the one theme that I like, and I think it is not consensus. It's a little frustrating because it's taken a long time to see a recovery. But the consumer, I think, over there is the way you want to play it. And I have owned other U.S. operators, casino operators, but I just think that there's more operating leverage in China.